Vinod, hi, good to have you with us. How have you been?
Hey, all great here, Ashu. Thanks for having me here. Exciting to do this after a long time. Looking forward to some interesting questions and some excitement.
Super. Vinod, this is a session we've been wanting to do this for some time now, right? I've been particularly excited about this session. I think in general, I've been excited about my sessions with everybody in the investing fraternity. Given the environment that we are in, right? And the market has changed. And how, right? And this is not a trend which is just an Indian trend. This is something which is a global trend, right? So when we talk about Java Capital and all the amazing work that you've been doing, we'll also be talking about what's happening, right? And a lot of, for example, from a founder standpoint, from a promoter standpoint, there is a lot of, while there is exuberance, right, and that there's a lot of this confidence, and the market indicators are the way they are. I think this is a time which calls for some sort of caution, right? And we're going to talk about that as well through the course of the conversation. Like I said, right, this becomes an exciting conversation because the stage that you're coming in at is a very early stage, right? I believe anybody who's operating at that level, kudos to them. It's just so difficult in a market like India, as complicated as India is, to going out and supporting those businesses, right? Because you never know how these systemic issues shape up, right? And the possibilities could become so different, as you go along. So we're going to talk about all of that, But before we do all of that, a quick round of introduction to all, about yourself, the career that you've had, and from there we take on the conversation on Java Capital. Over to you.
Hey, thank you. A brief introduction. I've been part of the venture ecosystem, both as a founder, as an employee, and eventually, a founder of a venture capital firm. Right? I think this journey has been on for the last nearly 18 years.
Right.
I call myself a Bangalore Huduga, Ashu. I mean, I was born here, brought up here. Two generations Bangalorean, and
Right.
I think I'm grateful for that. And so, right, that's where I started, and that's where I think it continues the journey. I've initially started my career in a technology company or a startup in 2006. I think startups were not that famous in 2006. Called Immust in Indranagar, now also the hotbed of the ecosystem in some form.
Right.
I did start then, and that company, got acquired by Sequoia and KKR at that time, and eventually, became a part of a larger corporate setup called Arisen. I think that was my first stint, where I, really realized, what does it mean to work for a early stage startup, and also, looking at it from the other side, right? What does venture capital do? For founders, for investors, and for employees, right? I could really see in action both ESOPs working, venture returns happening, all this, right? Like in the first 2-3 years of my career, I think, that ringside view is unbelievably, difficult to get. But I think I just had the right place at the right time. I had a chance to look at that. Actually, that set the ball rolling for me, for a decade down the line, saying, look, you need to get after VC industry. You want to become a VC? I think you should ask, I'll answer this, why I wanted to become a VC also, right? I was reading Black Swan at that time and looking for controllable black swans, Taleb mentions a few places where you can find controllable black swan. And venture capital is one of those places, right, where you could actually, get these non-linear outsized possible returns, really, and go after, potential controllable black swans. And that set the ball rolling for me. And, I've been chasing, startups and VC since then, in preparation to eventually become a VC, right? So I joined another startup in 2010 called Just Books, which was incubated at NSR scale at IIM Bangalore. I completely shifted career from technology to business development and marketing.
Interesting.
And a complete role change, from coding at the computer to going around the country and setting up and marketing, technology-led library chain called Just Books. That was my second stint for about 5 years. I think phenomenal learning. Not the outcome that you would get, right? Like, that not all companies become massive unicorns, right? But I think the outcome was more in terms of, who I am and what I am. I think it was a fabulous team that I was got to work with there. And I think that journey was like, an unpaid fellowship, MBA, whatever we wish to call, right? At an opportunity cost, but I truly enjoyed that and learned a lot about the startup ecosystem, what it really means to run a startup, and what it means to also raise money from investors. Another side of the view that I got. That was my second stint for another 5 years. And then, I joined Kalari Capital, working with the seed arm of Kalari Capital called K-Start. I invested in about, a bunch of companies there. I think that is a stint, eventual logical conclusion to what I was chasing for over a decade.
Right.
So that was for another 3.5, 4 years. And then I quit in 2020 in the beginning of the pandemic in India, and then set up Java Capital. And here we are at Java Capital today.
Super.
Talking to you. Yeah.
Super. So that's a good one, right? And I think that exuberance and excitement is still continues, right?
Absolutely.
At Java Capital. Vinod, we're talking about Java Capital right now. You bringing a lot of your experience, right? Plus the money. Now you're leaving it from front, right? I'd love to understand the construct of Java Capital and what's the thesis there? What are the check sizes that you're doing? How quick are you with this entire thing, right? Are you working as a syndicate, moving towards, being a fund? What's the construct? I'd love to understand it.
I think the last part of it is the bang on, right? We were a syndicate, and now we've set up a fund. We've got our licenses to be up and running. We are currently in the process of raising a $10 million fund. We're doing a first close shortly, and I think media should hear us, and maybe now they're hearing it through us. So we should shortly announce the first close of the fund, and we've already started issuing term sheets from the new fund. And from a focus point of view, Ashu, I think very clearly, we are want to be the first check into a lot of these companies. We are a pre-seed seed fund. We cut check sizes anywhere between USD $150,000 all the way to $250,000.
Interesting.
That's where we think our 10 million can be deployed in at about 15 to 20 companies. That's our fund strategy. We will try and develop on companies which are doing well, but not go more than $1 million in a single company. From a concentration risk point of view. Our strategy is very, very clear. We want to do pre-seed, seed. Go after, about 5 themes, which is deep technologies, the likes of Agnikul, similar that we've done in the past, similarly. And the second theme is SaaS, building enterprise software for both India and for the world. The third is, EdTech and FinTech. And the last one is consumer. And since we are a three partner firm, right? We actually are one of the fewest firms in India with a 3-partner firm doing a pre-seed seed fund. And that kind of provides us a massive amount of bandwidth to work with founders and just not put capital into these companies. So we closely work with them and see, where can we logically take to them, either to a Series A, Series B, where we could potentially hand it over for, to the next set of investors to give an oversight. Before that, we really want to, work with these companies and take them to that stage. That's largely, how we've been working. That's Java Capital in a nutshell.
Super. Wonderful. I have a bunch of questions on the sectors that you've chosen, right? While of course there are a lot of global pressures that we continue to sort of see and face, right? And I think they're becoming just so much more pertinent in many ways. I think a lot of these spaces are also getting commoditized, right? Because of over liquidity and many such issues. But I'm going to come to that just a bit, right? But before I do that, I'd love to understand, why don't you take us through the portfolio that you have? And you have some amazing startups, right? Why don't you, give us a sense of that, right? And the ones you're particularly excited about. I'd love to know.
No, obviously, as an investor, right, you're pretty excited. Good, almost all, if I say, right?
Right.
But I'll tell you also, right, some of my personal interesting picks that, which I love also, right, at the same time. Right. There's this company called Agnikul. I'd seen this company long ago, not before investment. I'd seen it like 4 or 5 years ago in 2016, 2017, in the early days. I couldn't invest at that time, but, when I came out and set up Java Capital, right, I said, look, this is a company that I'm going to invest straight away.
Right.
So the conviction was already built, right? Like Agnikul is one of those companies for us, which is doing pretty well. Second company is again a similar kind of process. I'd seen them earlier. Then I came out and I said, look, I'm convinced I don't need to ask more questions on this, right? I'm going to go in. If you look at it, these are 2 deep tech companies where I look at very closely in a way, right? So that's something very exciting, 2 companies for us. One is a rocket launch company, which is going to launch sub 100 kilo payloads into for satellites into the orbit. That's Agnikul for you. The second company that we recently announced is called Schindler. Schindler is very interesting, Ashok. From I'll tell you where the angle for Schindler is. It's some level a holy grail problem. When I say holy grail, right? Look, robots are not intelligent today. Robots are very mechanical. You tell them to do X, Y, Z, they will do X, Y, Z.
Right.
But if you change the scenario, you change the lighting, you change the environment, the robots can't function actually, literally, right? They're just built for, a purpose. Exactly.
A very defined task.
Exactly. So Schindler is going after building customizable, real-time possibilities where, you change the dimension of an object, you change the lighting, right? It will be able to adapt. And it will be a lot more flexible than the current robotic technologies that we have.
Interesting.
I think that to me is like a very interesting holy grail problem tackled by, maybe not more than 3 companies in the world. And somebody tackling it out of Bangalore, right? I think, when I went to meet the founder for the first time, right, they were building it out of an apartment. A 45-minute meeting, turned into 2.5 hour long conversation.
Right.
So such engagements, right, really, is what I think, I want to stay in the space for, right? Like, you're so excited that, you just lose track of time talking to founders, talking about technology. Right. I think that's what gets me excited. And those 2 companies are like something, I'm like super gungo on. But on top of that, right, we also have invested in a bunch of other companies in SaaS, like Custom Fit, again, founder who's been persevering for a long time. Building a technology product again for the world. That's something exciting. From a rural angle, right? The other company that I'm very excited about is called Ola Metal. Ola Metal is actually providing loans as good as what you would be able to access in cities in a very convenient, easy format, but for the rural masses. The reason is the rural masses, right, use WhatsApp largely, and they don't want to be seen, outside a jewelry shop, because it creates, societal issues also, right? Oh, okay, you're run out of money. I'm sure even in urban areas, people look down upon you if you are like pawning your jewelry. Right?
They do. They do.
At least some of them. Yeah. Yes. So they're trying to sort that out, by going to the people's houses, getting it done in the house, and creating some sealable technologies, testing it, mobile testing facility, so that purity of gold can be tested, and the loan will be delivered immediately that way.
Interesting.
So that way, right, the stigma is removed, which to me is an exciting space, because as a country, right, poor or after a certain class of people, right, don't store wealth in terms of let's say a real estate or stock market of music. Everything stored in gold. I think that's like a great way to tap into the gold build-up in the masses, and also provide them an avenue, to kind of utilize it, by taking away all the social stigma that are associated with, owning gold. Very excited about that company. Yeah, when I can go on talking about a lot of
no, but I think at my level it's an unfair question, right? I think it's an unfair question, right? To be asking a father, which is the child you love the most, right? Exactly. That's an unfair question to a large extent, right? And I could sense that, right? I think I think every single company that you highlighted, right, and many more that are there in the portfolio, right? I think one thing which is very clear is that you're really there's a very deep dive down thesis, right, with which you're kind of looking at these businesses, right? Of course, these are very, very complex businesses. Each one of them is a very, very complex business, right? And I think they can be separate conversations in themselves, right? But I think what you're possibly looking for is and is something that I deduced from what you're kind of saying, right? Is that you're looking at those crevices that are going to make us a more consistent economy, right, as we go along, right? And I think that's a good way to look at it, especially the market like India, which is just so much more fragmented and divided, right? Now, Vinod, like I said, right, we can cover each one of these startups with their nuances, problems that they're solving, and challenges they have, right, in themselves, right? But I'm going to talk more about something which is horizontal or natural for all of these businesses that you're going after, right? And I think today the biggest of all concerns, while 2 years back it was more COVID, how kind of COVID sort of impacted, right? Today we are in an environment which is very inflationary. Inflation heavy, right? And this is, like I said early on in the conversation, this is not a local phenomenon. This is something which is a global sort of a build-up, right? There's a massive amount of uncertainty which is there. Interest rate movements are just so thick, right, across all economies, right? Money is moving into safer havens, right, into safer instruments. We've not seen a condition like this in the longest possible time, right? Even in the best of crises. Now, what we saw possibly, and you can answer possibly this in a few ways, right? At a portfolio level, and in general, what's your perception, right? In terms of how the market is going to shift. What do you make out of this, right? So COVID did this massive transformation of the economy, right? Where we become information first, where we became data first. Our need for, on other people, right? Our recommendations reduced, and our own innovations kind of took a backseat, right? We became, like I said, search first in many ways, and with more disposable capital, right? With financial instruments kind of getting democratized in many ways, fintechs coming in. We were in a very different phase. Now is a very, very different phase, right? We're going through many cut downs and so on and so forth, right? So I'd love to understand, like I said, one, what's your sense of it from an overall startup standpoint? Because some of the bets that you've taken are spaces that are, say, capex heavy, right? Are spaces which are going to require more capital to get to a point where they become so much more sustainable, right? How are you looking at those opportunities? And second, what's your sense of the overall market to play out?
I think, let me take the overall sense of the market, Ashu, sure. First, right? I think the overall sense of the market is, everybody's decided the winter is arrived now. At the end of the day, right? I mean, now we can claim, yes, winter's here. What does that mean, for our companies is that, look, we want to make sure that, companies are well capitalized, right? Sure. So I think the scenario that, winter has arrived is clear. We've kind of also are on that same bucket saying, look, capital is going to become difficult for growth stage companies, and mid stage and growth stage are the ones which are immediately seeing the effect, but this is going to trickle down, to lower level. It's like a pretty clear ladder, right? Public markets get hit. Obviously, the hedge funds, crossover funds, all of them got hit. Then you have the late stage guys hit, the mid stage guys hit, and then automatically it's going to slowly come down to early stage and eventually to our stage. But our stage is, in a slightly different scenario, if you ask me, because the capital is not dependent on external, frankly speaking, at our stage. A lot of capital at pre-seed and angel stage, right, is dependent on domestic capital, and it's also dependent on a new class of capital which has emerged over the last half a decade, which is like existing companies, founders putting money, right? Indian HNIs and family offices putting money. I think all those capital are not as severely affected as, let's say, the hedge funds and the mid-stage funds, frankly. So my theory, again, not validated, my hypothesis is that the pre-seed angel stage will continue to throw up companies. Maybe people will be a little cautious, valuations may reduce a bit because the overall sentiment is low. I think capital will be available for good founders. Right. Especially in the earlier stages. Which to me is actually, sets the base for when the cycle actually booms again, which will happen, let's say 12 months or 18 months from now. So I would continue to invest. And, I said, we are open for business and we will continue to invest because we have a 2-year, 3-year window to invest. And I don't see a problem, just because of this cycle that, we should stay away, right? We will get to invest in really good founders. Competition will be left. A lot of capital which jumped in, because it was super exciting, right? Or just because of the excitement, right? I think they'll all go away, which basically means serious players like us, get a chance at, a better chance at, investing
at better valuations.
At better valuations, right? At better valuations. So I think, we are playing this for the long term. I always keep telling, long-term games with long-term people. And this asset class is long-term. It's a 10-year asset class, right? I mean, I would not be worried about a 2-year upturn or a downturn, frankly speaking. If I can deliver the returns in a 10-year cycle, right, I should be doing really well for myself and my portfolio companies and founders, and for Java Capital. So I think I'm not too worried, frankly. I'm not losing my sleep like folks.
Are you a happy soul that the costs are rationalizing, right? There's a rationalization of costs that is happening. Are you a happy soul? I mean, tech was going through the roof, right? I mean, it was something which was giving nightmares to, I think, everybody out there. Do you think some of that is going to become more sustainable, right? Because it wasn't for the last 2 years what we've seen, right? What's your sense of that? And does that make you happy soul?
No, I think it actually makes me happy because things get rationalized. We are not going crazy. I mean, I've had crazy experiences in the last 2 years, right? Like, I'll give you an anecdote, right? Like, I think we're talking to a founder, we were talking at, let's say, $3 million valuation, Ashu. And, the next week or, the next couple of days, the founder comes and tells, look, I have got term sheets for all the way up to like $11 million. I don't need your money. I'm just giving an example, right? That means, people are willing to, throw money, including the top tier firms in the country, right? also, right? So competing was obviously getting harder and harder, right? So that will get rationalized. So I might be in a better position, I believe. And also the other thing is cost gets rationalized.
Right.
The salary of technology salaries, right, had gone through a massive boom, right? I mean, I just saw today's papers, people talking about people going back to traditional industries to work again. I mean, this news, right, is like a proper cycle, right? It falls, people go back, when it booms, people go back.
Right.
I'm like, still your touristy folks is what I call it as, right? I think people who really believe in the ecosystem will continue to stay irrespective of the up cycles and the down cycles.
Right.
And that is good for the startups because you can afford to have good people, to work for you at a rationalized cost, at not like some exorbitant.
Oh, absolutely. I think numbers. It was. Yeah. I think it became literally, a selection, filter for many investors, right? Yeah. Are you capable to handle tech, right? Or how thick is your tech? Is this sustainable, right? Because hiring became just so much more difficult in that kind of environment, right? And I think this is at least a happy news, right? I think that aberration, right? That abnormal aberration is kind of now settling down, right? And then my sense is, I think going forward another 6-8 months, I think it's going to settle further, right? Making more businesses sustainable, which is just so much more important, and especially in an economy, which is not necessarily very, burn savvy, right? If you can call it that way, right? I think we're very profit centric in many ways, right? And I think that becomes important in the overall, spiel of how organizations are going to get built and how they can kind of communicate going forward. Now, Vinod, I want to talk to you a little about SaaS, right? Now, SaaS is something which has been a flavor of, the season, right? And, there's a lot of money which has been prominent, right? And of course, FreshForks got listed and a bunch of other companies, within the same space got listed, Indian browsers, external browsers. They've done exceptionally well, right? And SaaS became like a natural sort of a hedge for a lot of investors, right? Because of largely their adoption, because of the transformation that happened and the consistency of payouts that kind of happens, right? Now, cut to an environment like the one we are today, right? Now, my sense is, and I believe that organizations, given the reduced budgets, right, and the overall growth rate and so on and so forth, right? One, the adoption is going to slow down a little. That's number one. Number two is that, the prices are going to get commoditized very, very quickly, right? I think it's going to become a very clear pricing game, right? Now, that essentially means that it's going to cut down the overall, the abnormal profit possibility for SaaS businesses, right? What's your sense of it? How do you see that happening? And like I said, right, this is not a phenomenon which is in India, right? This is like a global phenomenon. We're going to have deferred demands and we're going to have slash pricing. How do you see that, right? Is that something that you see playing out already?
Yeah, I think just going back a little, right, on SaaS side, after COVID, right, everybody said, let's look for some safety and, invest in SaaS companies. That's what actually happened actually just for COVID, right? They're trying to de-risk, saying, look, let's play a global play. Because everything was going remote, if you remember, right? Zoom stopped.
Yeah, absolutely.
Crazy. So what also happened was SaaS itself, went through a massive exuberance in India also, right? I think, it became so costly to invest in SaaS company at a point in time, because it was impossible because everybody was just lapping up any SaaS founder coming out of any unicorns, frankly speaking, literally, right? They were being handed over checks, as soon as you quit the company, literally. That's what's happening. After a point, right, it became so difficult to compete for SaaS deals because of the capital. But now the US markets have fallen, including the Freshworks you mentioned, right? It's come down from its highs of $54 to $15 as of yesterday that I see, right? That's like almost a 1/3 down from the peak. So people have realized, nobody is going to pay that multiples now.
Yeah.
So whatever exuberance was there, it has to turn into profitability, and the exuberance multiple of, let's say, 40x, 50x on your GMV or a recurring revenue, right? That's not happening. It's more rationalized and averaged out to, let's say, maybe, if you're really good, 15x, maybe 8x is what the current Nasdaq's average on all the tech companies are roughly, that.
Right.
So I think it's come down, so, and it's a clear signal that, look, you will have to wait out and build companies and eventually take it up, when the cycle turns out. So the one question I'm not able to still answer is, right, look, if multiples of some of these, the tech stocks that could just fall in, will the multiples go up to the same levels? Which is a difficult question to answer again, right? Will it go to the 60 multiples or 50 multiples again in the public markets of the SaaS companies, right? Take any company in the US, right? Zscaler, Datadog.
Right.
At least what I'm hearing is people believe, yes, it'll turn around and eventually they'll get to those multiples.
Right.
But we don't know how long, when, which in a way is an opportunity again. SaaS also presents an opportunity again at a lower valuation. The exuberance is gone. I think a lot more rationality in play. But I think competition for still continuing to invest in SaaS is going to remain. I think that because the new breed of SaaS focused funds, SaaS focused investors, expertise is all got built up in the last couple of years because people saw that as like a great opportunity in a way, right? So that expertise is not going away, and that expertise is only going to make people to build newer companies. And the Freshworks IPO itself, right, has created enough liquidity for people to come out and start new companies. Actually, if you just track those numbers itself, right, those are phenomenal numbers. Number of people moving out post the liquidity scenario and starting new SaaS companies is like phenomenal. And they're all getting invested. So all of those will play out in the next cycle as we go through. So, and
I have a slightly contrarian view on that one, right? And not necessarily completely contrarian, but slightly contrarian, right? And that view is that the transformation that we saw in the last 2 years, right? I think literally the world came to a standstill, right? Now, when an event like that happens, right, you typically try and plug as many gaps and as many holes as possible, right? And I think that is something that we've seen, right? The mindset was just so much more phenomenal, right? Very adaptive in many ways, and that's the reason a lot of tech integration, for example, happened. That not just in the developed markets, also in the developing markets like India, which have been extremely bureaucratic in many ways. My sense is, I think, going forward, right? So while of course the jury's still out, right, in terms of what are the multiples that we're going to see, and and that was largely because of the event of liquidity that we saw, right, which was abnormal, right? I think as we go back to our inefficiencies, across all economies, are we going to see that kind of multiple? I think it's a tough one, right, to call for that. My sense is that I think from an overall adoption standpoint, I think there could be a slight lag in the speed, right? I think ROI is going to become just so much more important because now there's a lot more tracking which is happening, right? I think organizations understand what's required, what's not. I think 2 years back, the event was where you had little option but to just very quickly integrate, right? I don't think that urgency will be there unless we hit another phase of COVID, right, or some other such complexity that could emerge in the process. But I think, like I said, right, the jury's still out. I think both of us will get I think our theories will get tested, right, as we go along. Vinod, now the market has become very, very exciting, right? It's also become very complicated at the same time. This is more crystal ball gazing. What I'd love to understand, what are some of the opportunities that you're looking at? What's become exciting, especially last 2, 3, 4 months? What's become exciting, right? What is it that you're going after? I'd love to understand that.
So I think we're still excited about deep tech Ashu and what's coming out of India's universities and colleges that we're seeing, and I think the appetite for India deep tech is actually it's a nice sweet spot for us because there's not too many players who want to play that game. We want to play that game. I think we continue to look at deep tech. We're looking at an opportunity in the aerospace sector as we speak, and another SaaS company that we are looking at. What is not looking as exciting it was before, I'll tell you that, right? EdTech is no more as exciting it was. I can tell you that, creator economy is not as exciting as it was. Web3, is not exciting, as it was. Like in the last 12 months, Web3 was going all guns blazing, right? Maybe, it's not exciting, I think, even in the Web3 space, we were slightly cautious. We were not sure, what does that mean? But I think, we are pretty excited about, deep technology companies and, consumer face kicking and, yes, inflation is a concern. But if you look at luxury car buyers, right, again, there's a backlog for 20 months, Ashu. So, which again is an indication that, the top percentile, that is the 1-2% of the Indian economy, is literally driving almost a discretionary purchase of any D2C brand today. Right. So if you have companies which are serving that class, right, it may not become a large company in the short term, but I think it still plays into, wanting to play in that space. I think the first 50 million to 100 million people is what we have still. I think, that's a conversation that I would agree on, right? Like, even though research reports will say we'll become 300 million e-com, right? Like it was telling in 2015 we'll become, we are in 2022. We're still not like, that numbers largely. So I think any companies which are targeting that segment, right, the first 50 to 100 million, very clearly in the D2C space and deep technology and SaaS, right? That's where for us it's exciting. The reason it's exciting all three is because it de-risks us very well.
I agree.
Deep tech is a long-term cycle for us. It gives a global play. SaaS again, India to the world play. You can build for India. And on the Indian consumer economy, we play on the consumer D2C and the brand space. So it gives us a nice mix, and with a three-partner, right, it just de-risks our portfolio so that we can go back to LPs and say, look, we'll not lose your money, right, for sure, at least. Yeah.
So I think I particularly like and love of course the passion and the energy that you kind of you have for. The opportunity that's out there, right? I think, but also, the pragmatism with which you're kind of approaching some of this, Vinod, right? And I think you're absolutely right. While this is so ubiquitous, right? This is an asset which is, a 10-year asset, right? This is an asset class which is a 10, 12-year asset class, right? You have to be in it much longer. You cannot consider it to be equity-like, right? Or compare it with highly liquid avenues, right? I think we tend to forget that in the process, right? And like I said, I love this pragmatism with which you're kind of approaching it, right? And you're right when you say that the cyclicity, we are kind of over-fretting ourselves on the cyclicity that we are in, right? Eventually, it will phase out, right? Of course, there are issues, there are problems, all of that has come together, but eventually it will phase out. You're absolutely right that there is a certain segment which is the 5, 7, 10 million people at the top of the value chain who continue to stay unaffected, right? And they are going to give that consistency which is required and possibly help us tide over, right? And going after that segment as a priority is just so much more relevant and right in many ways. I think organizations will have to essentially start looking at, how do they cater for them, right? And how do they maintain that consistency of utilization and consumption and that relationship? Because eventually everybody will be going after the same segment going forward. Vinod, last question. It's very cliched, right? One, what are the next 2 years like? And second, whatever advice that you want to give to founders in the environment that we're in, especially in the next 15, 18 months, like you highlighted, I'd love you to, I'd love to end this conversation at that level. Not that I want to, but all good things have to come to an end, and we'd love to cover some of those points in the next conversation. But these 2 points I'd love to capture as a. No,
absolutely. I think. Look, I think I'm pretty optimistic. Cycles come and go. We are playing the game for long. This is not a to use a cliche term again, not a news cycle for us. This is a 10-year cycle. So we are in it for the long. I think founders also are all in it for the long. So I think we should just put our heads down and work. One piece of advice that I would say is, if there's any money that's available on the table, please take it. Don't wait for valuation. Take any money that's on the table. Cushion yourself for the next 15 to 18 months. Actually, we will get over the cycle. I've seen 2008. I've seen 2015. So I'm not surprised, to see another cycle, right? This seems to happen every, roughly 8 years to 10 years kind of cycle. I think we will get over it. I'm pretty optimistic about, what's happening in the country, and, super excited. And thanks, Ashu, for having me. It's been interesting. Look forward to seeing, doing another, maybe a detailed conversation on some of our portfolio companies.
Much sooner.
Yeah, thank you.
Thank you, Ashu. It was a pleasure to host you. Thank you so much, Ron. And on just the cycle, right? I think Indians are extremely resilient, right? And I think that's in our nature. And I think possibly my sense is, I think a lot of very mature, savvy individuals, professionals, right, who, for example, not been crossing over. Well, this might just be a cycle which might make them do that, right? So, that essentially means we're going to have more great founders to back and talk of, and and solving for the complex market like India, right? And that's always good to have, set of
super exciting,
founders, right?
Yeah.
Thank you, Vinod. It was a pleasure to have you. Look forward to having you much sooner on the portfolio companies, and of course, talking more about the macros and the way they play out. Thank you so much, guys.
Thank you. Have a good day. Thank you. Bye-bye.
Thank you.
Take care.